Namaskaram. We are starting with non-resident taxation. It is forming part of international taxation. In this chapter, we are not only going to focus only on non-resident taxation, but so many factors are there. So there are so many sub-chapters like exemptions applicable for non-resident taxation, residential status of NR, then special rates of tax for NR, special computation mechanisms for NR, presumptive taxations applicable for NR. So these are the sub-chapters. These are the sub-chapters that we are going to discuss in NR taxation chapter, my dear friends. Before I can go ahead and discuss the whole taxation system with you, first let us understand who is the not resident in India. A residential status of individual, HUF, AOP, BOI, everybody we have discussed in the residential status chapter. Here we are going to talk majorly about company. Because so far as company is concerned, residential status of Indian company is always a resident, but residential status of a foreign company, because we are talking about international taxation, that depends on POEM, place of effective management. And you are already aware that if POEM is located in India, even a foreign company will become a resident in India. So how do we check whether POEM exactly falls in India or not? So that's a major focus of this whole series of lecture that we are going to have. So look at the introduction. The concept of residence-based taxation asserts that natural person or individuals, so individuals are also called as natural person, male, female, assessees, are taxable in the country or a jurisdiction in which they are established their residence or domicile, regardless of the source of income. So Indian residents are taxable for global income. In case of companies, for company, the here focus is more on the companies, and that to foreign companies, not on Indian companies, because Indian companies are always resident. In case of company, the place of incorporation or place of effective management is generally considered as its place of residence. According to source-based taxation concept, please understand there are two major concepts, no, residence-based concept and source-based concept. If source is located in India, then income become taxable in India, whether you are resident or non-resident, that doesn't make any difference. So this is like scope of total income section 5. They are trying to explain you that there is a residential status concept and there is a source-based status concept. According to source-based taxation concept, a country considers certain income as a taxable income if such income arises within its jurisdiction. Such income is taxed in the country of source regardless of the residence of the taxpayer. So these are two exactly opposite rules, isn't it? When you become a resident of India, your global income become taxable. Forget about source of the income. Source can be in India, source can be outside India. When source of income is located in India, then income become taxable in your hand, whether you are a resident or non-resident. So these two are very basic understanding that you must have developed till now, because we have completed whole income tax syllabus by this time. So you understand these two rules very much clearly. So place of effective management is internationally recognized test for determination of residence of a company incorporated in a foreign jurisdiction. Here we are not talking about any entity which is incorporated in Indian jurisdiction. We are only talking about foreign jurisdiction. For foreign companies, only POEM concept becomes irrelevant. For Indian company, because it is incorporated in India, by default it is Indian resident. Any determination of POEM will depend upon the fact and circumstances of the given case. There are so many guidelines issued by the CBDT. We have to learn those guidelines now. The POEM concept is one of substance over legal form, because POEM, legally your company is incorporated outside India, legally you are trying to show it as a non-resident or foreign company, but in substance the company has management in India or they are doing their effective business in India. Then what are we doing? What are we doing here? We are ignoring the legal form. We are ignoring the legal form. Legal form is outside India. We are trying to say in reality, real form, in substance, whether company is located in India or not. That's what we are checking here. So residence status we determine for every year. Similarly, we have to check the POEM of the company on year basis. You cannot say if a company becomes a resident in year 1, foreign company becomes a resident in year 1, every year it will become a resident. No, it's not like that. Every year we have to check whether the POEM is located in India or not in India for a foreign company. Now section 6.1 talks about residential status of individual, already dealt in a residential chapter. 6.2 talks about HUF, residential status of HUF. 6.4 talks about residential status of firm, AOP, BOI, local authority, AJP. All these things we have already discussed. So far as the individual is concerned, it depends on number of days stay in India. For Hindu undivided family and other entities, it depends on management and control. If management and control wholly in India or partly in India, it becomes resident. Wholly outside India, 100% outside India, it becomes non-resident. But this law is not applicable for companies. Then what is the law for a company, sir? We have already discussed, but I'm taking it as a revision here. Sir, there are two types of companies, Indian companies and foreign company. What do you mean by, sir, Indian company? Company incorporated in India, company incorporated outside India. Foreign company means company incorporated outside India. So, Indian company, if poem is located in India or outside India, what will happen? Whether poem is located in India, still it is a resident. Please understand, if poem is located in India, still resident, and even if poem is located outside India, still it is resident. Why, sir? Because the company is Indian company itself, sir. Company was incorporated in India, by default it becomes Indian company or Indian resident. For a foreign company, obviously there are hundreds and thousands and lakhs of foreign companies which are incorporated in Australia, Germany, USA, Canada. Those companies are not Indian resident. Obviously those companies are foreign companies, non-resident companies, because they are incorporated outside India and their poem is also located outside India. But for manipulation, for tax purpose, you have incorporated company outside India, but effectively you are doing businesses in India. Your management is sitting in India. This can be done with an objective to take the benefit of low tax jurisdiction or no tax jurisdiction. Usually people will try to have a company in tax havens, and if your company is located in the tax havens, my dear friend, then the tax rate will be very low, 1%, 2%, 0%, 5%, 20%. In India, for companies, the tax rate is minimum 15%. It will be more than 15%, but minimum it is 15%, and therefore people would like to have a company incorporated in such a country where tax rates are very low, but they will run the businesses in India effectively. Therefore, for foreign company, the concept of poem becomes very, very important. And if it is in India, then it becomes a resident. If it is outside India, then it is by default non-resident. So, what will happen if the foreign company becomes a resident in India? Nothing, my dear friend, a global income will become taxable in India. Not only Indian income, but even a foreign income will become taxable in India. So, place of effective management and OR NOR is not applicable for the companies. So, what do you learn here? You have learned if it is a Swadeshi company and Swadeshi management, Swadeshi company, Swadeshi management, the company is a resident company. Swadeshi company and Videshi management, still the company is a resident company. Swadeshi, Videshi company, please understand, Videshi company and Videshi management, foreign company, foreign management. This is the non-resident company, because these are the normal companies, foreign company, foreign management. Ordinary it should be non-resident. But a Videshi company and Swadeshi management, like you are having a foreign company but poem is located in India, then it becomes resident. So out of 4 possibilities, only in one possibility where genuinely company is located outside India, then only it is non-resident, otherwise it becomes resident. Note 1, poem. So what do you mean by poem and how do we determine the poem? That is very important. The CBDT with a circular. So whatever we are going to learn, we are learning from the circular number 8 from 2017, dated on 23rd Feb 2017, also clarified poem guidelines shall not be applicable to the company having a turnover or a gross receipt of 50 crore or less in a financial year. In other words, if your turnover is up to 50 crore, the provisions of poem will not applicable to you because you are a small foreign company. Please understand, you are a small foreign company. We don't want to tackle the taxation on small foreign company. You can come to India, you can do the business. We are trying to talk about multinational corporations, multinational enterprises, big companies, okay, big time companies, we are talking about them. So if there is a company which is having turnover up to 50 crore in a previous year, ignore that. Do not apply concept of poem on those small foreign companies. Sir, how do we determine poem? This chart is very, very important for following categorization of the foreign companies. One thing again I am telling you, we are not discussing poem for Indian companies, we are discussing poem only for foreign companies. So if foreign company is having ABOI states, please understand, ABOI test we will apply. What is ABOI test, sir? Business test. If a foreign company is having business outside India, You only tell me. A foreign company is having business outside India, resident or non-resident? Definitely non-resident. A foreign company is having business in India, active business in India, obviously it may become resident. So first criteria or first test that we have to apply is whether the company is having active business outside India or whether active business test is applicable or not applicable. Okay. So if company is fulfilling active business test outside India, that means they are actually having business, active business outside India, they are not having business in India. Now we will check the additional condition. So this is the primary condition and then we have to check the additional condition. The poem will be considered outside India if a majority of board of directors meetings are held outside India. Yes, so what we were discussing here, companies fulfilling active business test outside India, my dear friend, has to fulfill one more test, and that is majority of the board meetings which has happened in the current year should happen outside India. So dual test, your business should be outside India, at the same time your management should be outside India. B plus M, your business and management, if both has taken place outside India during the relevant previous year, then we will assume that you are a non-resident, isn't it? Sir, what if my business is outside India but majority meetings has happened in India? If majority meetings has happened in India, then don't you think your brain of organization is located in India, though the business is located outside India? Then we will say your company is a resident entity because you are failing to comply the second part, second limb of your active business test, that is majority meetings should be outside India. So these two things you have to remember. To comply active business test, you have to comply 4 conditions. There are 4 conditions, 1, 2, 3, 4. All those 4 conditions, once you comply, we will call your business is located outside India actively. And then one more additional condition, bonus condition you have to comply, that is your meeting should be outside India. So what if they are saying board meetings have held outside India, but in reality the person who is managing the company is not outside India. In reality, a person who is actually running the company is in India. So de facto, that means in fact, if the de facto decision making authority is not a BOD but Indian parent or resident, then poem shall be in India. Obviously, if in substance the decisions were taken in India, we will call it Indian company. Sir, what if company is not fulfilling the active business test? There are active business test outside India. So there are 4 conditions. What if one of the condition is not complied? Then we have to take 2 more parameters, that who is taking the decision and where the decisions are taken. If a person who is authorized to take a decisions for the company is located in India, then without having this active business test, we will say company is the resident entity. If a person who is responsible for making major decisions of the strategic decisions of the company, then we will say, and he is located outside India, then we will say obviously that person, because a decision making authority was outside India, we will say the company is having place of effective management outside India. So let us focus on the first part first, imagining active business test is fulfilled, and let's learn that active business test criteria. Active business outside India, and hence poem is outside India. So when if it is satisfied all the conditions, all the following conditions, it's not 1 and 2, all the 4 conditions are cumulative. You have to satisfy that your active business is located outside India and majority of the meetings, please understand, majority of meetings of the board are held outside India. And how do we check whether active business is actively outside India? If a passive income, these are the 4 conditions, please try to memorize this. Passive income, that is not active income. If a passive income is not more than 50% of the total income, your passive income is not more than 50% of total income. That means you are not dependent on the passive income, you are dependent on active income. Then only you can have active business outside India. If you are dependent on passive income, income in the nature of dividend, income in the nature of royalty, income in the nature of rent, then you are not actually doing the business. A business making entity depends on the business, and then only we can say business is located outside India, isn't it? But if your income, passive income is more than 50%, then obviously you are not fulfilling the condition. So passive income is not more than, it's a negative condition, please understand. your business income should be more and other income, passive income should be less. This is what it means. The second condition, and less than 50% of the total assets are situated in India. This is very much easy. If you are having total 100 crores asset in your balance sheet, a global entity, a foreign entity, out of that 80 crore is located in India. Total asset 100 crore. 80 crore assets are deployed in India. Obviously, you are not having business outside India. You are having business in India. So if you are having total 100 crore asset in India, you are having only 2 crore out of that. So less than 50% of your total asset is located in India. So this is the second condition to comply the conditions of active business test outside India. Okay. Next, less than 50% of total number of employees are situated in India or are resident in India. Please understand, you are having 1000 employees in your organization. Out of 1000 employees, 900 workers or 900 employees are working in India. How can you say your business is actively outside India? Okay, if you are having 1000 employees, out of 1000 only 40 are working in India and 960 are working outside India, then you can say yes, my 960 workers are working outside India, therefore my active business is outside India. But one more condition you have to check, and that is payroll expenses. Payroll expenses, that means expenses that we incur on employees. Just now I told you one example that out of 1000, only 40 employees are in India. Obviously, these conditions are complied. Out of 1000, only 40 employees are there in India. But these 40 employees are directors, CEO, CFO, vice presidents, you understand, top management, project in charge. All the main employees of the organizations are there in India. Okay, so I say this is the brain of the organization. In quantity they are less, but in substance they are the one who are leading the organization, controlling the organization. They are the pillars of the organization. Okay, though they are 40, obviously their salary income will be in crores as compared to this 1000 normal workers. So we have to check payroll condition as well. Payroll expenses incurred on such employees less than 50% of the total payroll expenditure. And the beauty is these 4 conditions are cumulative. So what was the condition again? Please tell me. Passive income should not be, please understand, more than 50%. That means it can be, if you convert this, you can say passive income should be less than 50% of total income or up to 50% of total income, should not be more. Okay, less than 50%, less than 50% of your total asset are deployed in India. Less than 50% of your employees are working in India. Less than 50% of payroll expenses you are incurring on those employees who are working in India. If you satisfy all these 4 conditions, please understand, we will say you are having active business outside India. Okay, so what will happen if you don't have active business outside India? Then we have to check who is taking decisions and where the decisions are taken. But usually we will be checking this. This is the primary test that we have to follow, active business test, either in India or outside India. Okay sir, active business is outside India. Now we have to check one more condition, majority. If majority directors are outside India, definitely your poem is outside India. Poem outside India, you are a non-resident. If poem is in India, you are a resident. Certain terms we have to learn here. So what do you mean by passive income? So this passive income definition you already know, by way of royalty, dividend, capital gain, interest, except for banking company. Obviously for banking and public financial institution, interest is the core income, but for other income, rental income. So this is a passive income, not business income. But this is something new that you have to learn. Income from transaction where, this word is very, very important, both. Purchase and sale of goods is from or to its associate enterprise. Just to show active business outside India, what these entities will do, they will do intra-group transaction. One associate enterprise will do the transaction with another associate enterprise, or one associate enterprise will do the transaction with another associate enterprise. We are not going to consider this as an active business. This is included in the passive business, but both the side. Please understand, if you are buying from unrelated party and selling to related party, or buying from related party and selling to unrelated party, that means one side is at least unrelated, then we will consider it as an active business only when buy and sale both are happening from the related party or associate enterprises in language of the transfer pricing. Then we will say this is a passive activity, it's not an active business. Active business means obviously you do with outsiders. Whenever you do business with your own people, your own holding company, your own subsidiary company, with your own branch, how can you say you are doing a business transaction? These are just the internal book entries, isn't it? Sir, income means what? How do we compute income? Because in India, income is as per Indian Income Tax Act. But this company is located in a foreign country. Then income as per tax law of the country in which it is incorporated. And if there is no tax law, there are certain jurisdictions where we don't have the tax laws, then as per books of accounts of that particular country. So value of asset, you said no, less than 50% of asset should be there in India. Should we check market value or book value? So we have to check the book value, and if asset is a depreciable asset, we have to take WDV of that particular block. Please understand, as per the tax law of that country, not India. Any other asset book value, but definitely not fair market value. So ignore the market value if they have given in the exam. So number of employees, if and only if less than 50% of their employees are working in India, less than 50%. So what people will do, what planning people will do, they need total 500 workers in India, total 500 out of 800. Okay, total workers that they are having is 800. Out of that 500 they need. So for tax manipulation purpose or to escape from this particular condition, what these people would have done, they will show only 100 workers are appointed from India and 400 workers are contract laborers, and these actually 500 workers are performing the same task. So they have expanded the definition of number of workers by including average number of employee as at the beginning and the end of the year. So you have to take the average. First of all, you have to take average, opening and closing. That particular average we have to check with a 50% of the total workforce, and shall include who though not employed directly by the company, that is contract employees, but perform the task similar to those performed by the employees. So employee includes contract workers. Please understand, here employee includes contract worker, and we have to check average of opening and closing to satisfy the 50% criteria. Payroll cost, less than 50% of the payroll cost should be paid to those workers who are working in India. Cost of salaries, wages, bonus, all other employee compensation including related pensions, social costs borne by the employer. Some notes that we have to learn from active business test. It is established that if a board of directors are standing aside, very, very important, board of directors are standing aside. Standing aside means it's like, you know, Mukesh Ambani has been a board of directors, but he actually doesn't look into day-to-day operations because he's having other 50 companies through which he will operate. So board of directors are there, but they are standing aside. They are not actively participated in the law, in the management of the organization, and not exercising their power of the management, and such powers of the management are exercised by the holding company or any other person resident in India, then we will say poem is to be considered in India. If your management is a foreign management, but that management doesn't look into the management affairs, somebody who is a resident in India is looking into the management of that particular company, or your holding company is looking into management of that particular company, and your holding company or this manager is located in India, poem is in India. For the purpose merely because BOD follows the general and objective principle. Sometimes what happens, if you are a Hindustan Unilever and you are Unilever Australia, you are Unilever Canada, you have to follow a guidelines given by your parent holding company. A parent holding company means a main holding company. All the countries are following some general guidelines given by the parent holding company. That doesn't mean Indian board of directors are not having their powers. Indian board of directors will have their powers, but obviously those powers they have to exercise with the general guidelines issued by the parent holding company, and therefore we should not check this the management style or management decisions based on the general guidelines. Okay, apart from general guidelines, whether they are actually doing business, actually managing the day-to-day activities or not, that we will check. If they are simply following the general guidelines, that doesn't mean they are not performing their task. Please understand. It may be mentioned that the provisions of GAR contained in chapter 10A of the Income Tax Act may get triggered if you are trying to play with us by showing active business test outside India, okay, and you are intentionally holding board of directors meeting outside India, intentionally. Actually it is in India, but on paper you are showing it outside India. then the provision of general anti-avoidance rule will be attracted, and then you will be punished with a very good amount of money of penalty and taxes. Sir, for active business test, average data of the previous year and last 2 years shall be considered, because we have to check whether business is actually outside India or not. You cannot only decide by checking the 1 year data. They are saying take the data of 3 years, year 1, year 2 and year 3. So minimum 3 previous year plus 2 preceding years. That means total 3 years we have to check the data, and then in all the year data should be consistent. So what if my entity was not in existence for 3 years, it was in existence only for 2 years? Obviously we will take 2 year data. So what if company is incorporated in the current year? Then the current year data. Sir, what if the country where this company is incorporated, they are following a calendar year as a end of the year? Then what will you do? We are following year 20, we are following a year. Here example, please understand this example. Suppose a company incorporated in USA and follows the calendar year for tax purpose. For the determination of the residential status, we want 3 years data. So which 3 year? For us it is 2021 is the previous year. So whichever calendar year ends in this year, we will take that year. So which calendar year ends here? December 20 is the year which is the ending year. So December 20, December 19 and December 18. These are the 3 years data that we will follow from the foreign country to check whether business is actively located, active business is outside India or not. Okay, this is how we do. So these are the ABOI tests theoretically. In next lecture, we will discuss with some practical examples given by CBDT. Thank you.